Gold has been money for thousands of years. In 1971, the last minuscule connection the monetary system had with gold was cut off. Today, central banks still purchase gold, with some purchasing large amounts on an annual basis. Many wonder if gold should be bought because they've heard about price predictions of astronomical levels. They've heard about the dollar failing, and they've heard about safe haven assets. So what's the deal with gold? You came here for the truth, so let me unveil that for you. Today, we're going to look at everything to do with gold and silver as well. I'm going to talk about the technical indicators. I'm going to get into the history. I'm going to talk about the 4 asset classes. I'm going to touch on things that I haven't done in a while. The reason is that I get emails, I get comments, I get correspondence every single day. People are asking me to make a video about gold and silver, make a video about precious metals, tell me, should I buy gold, and so on. So I did cover this in my books, and my points haven't changed. That's why I don't do an updated video every so often, simply because I haven't changed my opinions about it at all. So that's what I'm going to get into today. I'll make this video and then I can always reference people looking at this video. So let's begin by taking a look at this. When you search the mainstream media, when you talk to investment analysts, they're going to give you the general consensus, and that is the asset classes are broken down in this manner. Stocks, as in capital markets, foreign exchange, international markets, commodities like oil and corn and different grains, consumer markets, the fixed income, credit and debt markets like bonds and treasuries. That's what you'll see, or perhaps something along these lines. The 4 asset classes here we have stocks or equities, fixed income or bonds, money market or cash equivalents, real estate or other tangible assets. But all of these, of course, are referencing paper investments. Even the real estate is most likely referencing REITs, REITs, or real estate investment trusts, not the actual physical properties. And this is a big mistake. Instead, I like to look at Robert Kiyosaki's definition of the 4 asset classes because that is actually diversified. He gets into detail in his books, and definitely read them if you are interested. I have covered them in my books, particularly the Money GPS, but I will cover it briefly right now. So it looks something like this: a balanced portfolio. You have your business, paper assets, commodities, and real estate. And through this, you can have a diversified portfolio for investing. You wouldn't be buying all of these in one day. You don't invest in all 4 asset classes at the same time. You are to accumulate assets over the period of your lifetime. And there are times in which certain assets are overvalued, certain assets are undervalued, and it's in the times when they're undervalued that you begin to accumulate. Look, we only have so much money for our savings, and we put it away into different types of investments. Many people put it in the bank, other people put it in some sort of mutual funds or maybe some stocks, but a lot of people don't think of it as a balanced portfolio in this way. So that's what I'm going to talk about briefly here today, and you could see that many people are not looking at it on a realistic basis. Everything is paper. And if you're all in paper, you are not balanced. You do not have diversification. Diversification is extremely important. You have to get into what is real. If you think that real estate is too expensive, you probably haven't read my second book, and you probably are not aware of other things that are in real estate that are not actual homes. Then you have commodities. And yes, you can buy oil on your different trading platforms and everything else. You can get your paper assets, and that's all fine, but you need things that are real as well. Business is the forgotten asset class. Imagine you had some sort of business that pays you passively every single month. And not just that, if you don't work tomorrow, if you're not even alive anymore, that business will still be putting paychecks into your account every single month. And that's the importance of these different asset classes. They all have strengths, they all have weaknesses, but when you have them all, it really provides you with a bulletproof system. Okay, it's so important. So that's the balanced portfolio, and I think that it is really overlooked by so many people, even those in the financial industry. It's a big mistake, but I'm glad that an individual like Robert Kiyosaki, who's quite prominent, has talked about this before. I just want to be clear about a couple things. The reason why certain assets are beneficial may not be the same reasons other assets are beneficial. Each one has their own pros and cons that needs to be understood. So you have to look at, for example, real estate. It's generally expensive. Okay, if you're buying a home to rent out, that's going to be expensive. However, you make money in 4 different ways with real estate. With commodities, for example, gold, is the reason you buy gold necessarily to see appreciation on that asset class? I say no. That is not the reason. Then you look at businesses. Businesses may take a lot of work, at least initially, to set up, depending on the type of business, but there are benefits to it. There are tax advantages to it. There are ways to protect yourself with it. You can have liability protection and other things that are not available in other asset classes. Okay, then you have things like paper assets as well, but you know the benefits of those. So let's move on to this. This article essentially is talking about the benefit of gold. Many people in India purchase gold all of the time for weddings. They have them for different ceremonies, and they believe that gold means wealth. Okay, it is synonymous with that. And India purchases a lot of gold every single year. All right, at the bottom, although trading gold for money has become less common, gold still holds the same high value in Indian families. This is just one culture. There are many out there who are always adding to their wealth, and they do so by passing down the gold generation to generation. Does it mean that gold is priced at $1,000 today, tomorrow it's at $800, that's a problem? No, they're not thinking about it in that way. They have this idea gold is valuable, so we pass it down generation to generation, so the family maintains wealth. They don't care if it's $800 or if it's $600 or if it's $2,000. Sure, they want the price to go up, but they're not going to sell it. They're going to continue to accumulate it and pass it down. So if you get anything from this video, that's what I want you to understand. It is so important to accumulate it and keep it, not to completely put everything you have into one asset and then hope that you're going to sell it off one day, because that may not be possible at the time when you believe it's the peak. And when that occurs, many people are probably going to be in fear. They're going to be scared. They're not going to be able to sell. They're not going to know what to do with it. It's so beneficial to have some, no matter who you are, no matter what place in the world that you live, to have it and hold it and hopefully be able to pass that on to the next generation. If you want to sell, there might be an opportunity to do so, but you wouldn't want to get rid of all your asset classes. You want to maintain all of them as long as you possibly can. That's the diversification. So if you think that you're going to see the peak of a particular asset, whatever that is, you're going to sell it off and you're going to move everything into another asset, well, that's not really the best way to do it. You accumulate during the times in which they are undervalued, and you can then sell some when they are overvalued, but you don't want to get rid of your entire position in anything. Remember, each one has benefits. Now we talk about the price predictions. I've heard so many. In this example here, $50,000 gold. What about this one? Another $50,000 gold prediction. And then we have another $50,000 gold prediction. Well, let's look at this. They tried to come up with the reason why gold will be priced at a certain level. They make the case for $82,000 gold as well as $14,000 gold. They also make the case for $32,000 and $56,000 and so on. They're basically dividing the current value of all of the supply of money, either globally or within the United States, with all of the gold, and they come up with this price. And while that could be possible, it's not necessarily going to happen. So the price prediction is based on a future event that may or may not occur. That is called speculation. So in my opinion, I don't want to buy an asset for its appreciation. As far as I'm concerned, it's a bonus if that happens, but I'm not looking at that. When investing in any asset class, I don't look at the future benefit. I need to know today, does it provide me something today? And hopefully on the different types of assets, maybe a monthly income. If it's, for example, real estate, if it's gold, you want protection and you want to be able to have that and maintain it. There isn't a reason to want it to go to a particular price if you're not going to sell it. If you're going to accumulate, who cares what it costs? That's why people are foolish having their own homes and thinking that it's an investment. Why in the world world is that an investment? You don't want your personal residence to continue to go up in price every year. Why? So that the government could put more property taxes on you, so that you have to pay more insurance, so that everything gets more expensive in your life. It's not beneficial to you. You don't want that. But that's the way it is, and there's a reason behind it. So while I do love gold, I love it as part of a portfolio. It's important to hold all of the different asset classes for each of their benefits. Okay, I hope I made myself clear on that. The total gold mined ever is valued currently at about $7 trillion. Central bank gold reserves looks like about 33,000 tons. And then you can see the monetary supply and so on. They give you all that information here. I think it's interesting to show how little gold there actually is. It's not that much. When you look at it in a big pile, which I'll show you in a second, it becomes something very minuscule compared to the actual amount of debt, to the monetary supply, and even to other commodities. Here you can see the price of gold over the years, and I think it's important to address the fact that prior to this instance right here, 1971, gold was always at a fixed price. Okay, so they decided what that would be in US dollar terms. You could see throughout the 50s, it's at around $35. And then they decide that we can no longer keep up this sham, and they would let it go. So gold became just another commodity. It was no longer connected to the monetary system, and it rose dramatically. You can see how high it went. On this chart, it's showing me, let's say around 677, but I believe it was around $800 at its absolute peak. And then it fell. For the next 20 years, basically, it fell. It got down to, I think it dropped to about $250 an ounce at its bottom, and ever since then it rocketed higher. It peaked out, I think the top was approximately 1900 per ounce. Then it fell, and today it sits around, let's say 1200, maybe 1300, then it goes down to 1100. It's been trading in this range for years. The price, though, as far as I'm concerned, is not very important, because when you do this, you're speculating on a future price that you want to sell it at. And right now, it is the only asset class that I'm aware of that did not see the benefit of quantitative easing. Basically, everything rose. It's crazy to see the everything bubble, except precious metals. So obviously, we know that they are manipulated. That is confirmed. You could go to GATA, G-A-T-A, to get the details on that. But it's the question, will it rise in the future? Will it be $50,000 an ounce? And that's information I can't answer because I'm not an oracle. I'm not a soothsayer. I'm not one to tell you what something is going to be. But if my opinion, I think that it's wise to hold some precious metals. How much? That depends. What does your portfolio look like? How much money do you have to invest? What are you doing with your money currently? Do you have some savings that you need to unload into something real? What is your personal situation? And that's really what it comes down to. I can't tell you what to invest in. I can't give you financial advice, but I certainly can say that it has been known to be beneficial to hold on to gold and silver. Gold is incredibly rare. All the gold mined since the dawn of civilization would fit into a 20 meter by 20 meter by 20 meter cube. You're seeing everything ever mined in 171,000 ton brick. And while that's a lot of gold in a way, if you see the size comparison here, it's really not that much. So essentially, this is just telling us what we are encountering. We are seeing an asset that has limited availability. It is used for different applications, and the price hasn't risen in years. It's very unique in that way. The gold tree, where gold comes from and where it goes. So you'll see at the bottom, source of gold, and at the top is the uses of gold. So the sources, whether we're looking at areas in Asia, like China, for example, or South America, Chile, maybe we're seeing the gold come out of Russia, and so on. And then the applications at the top, whether we have the gold mining companies, the physical gold bullion, the exchange traded funds, investment funds, all of these different mining ETFs, you have all of the different coins, and so much more. So that's just an idea showing you where the gold goes, where it's coming from. And of course, this is a different situation with silver. Silver is often used as an industrial metal. It's very important, and the supply cannot be maintained because so much of it is used today. Now, 20 years from now, who knows what they'll use? Maybe it'll be a completely different metal. They won't won't use silver, but for the time being, silver seems to be very limited and very important. That doesn't mean that the price will go up. That just means right now, today, that is the fact. I can't predict what the price will be at. I just think that it's interesting it didn't see the benefits of quantitative easing. That's all. And very quickly to finish off, jewelry is so important for many countries who give it as gifts consistently. Traditionally in the East, this happens. You're going to give gold coins, you're going to give jewelry, and that happens to be a store of wealth in a way, but also as part of the cultural aspects. All right, this just shows you the different percentages and the amounts. And so I'd like to finish off the video very quickly. Just wanted to let you know that if you wanted more videos like this, if you wanted some details that I don't really cover on my daily news type videos, you got to check out my main channel. You scroll down to the bottom and you will see the how to and solutions playlist, and you will also see the easy e-course. So check these two out. I think they're really important, really informative, and you should definitely be looking into what I have in here because these are sort of the evergreen videos. They're always good to see, always informative, and so definitely check them out. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have everything you need, from the foundation, the asset classes, making money. I talk about gold, I talk about all the asset classes in these books, so check them out at the link in the description if you want the audiobook that's available at themoneygps.com.